My name is Bruce Hughes. I'm part of the tech advisory team for the DAO1 Foundation. And my role today specifically is to take you through the technology that drives DAO1, the products that sit on DAO1, and some strategies on how best to use those products to maximize results from the DAO1 platform. So those are the three parts that we're going to go into together. But before I go into that, I'd love to hear from you in the Q&A section. What is your understanding of cryptocurrency, blockchain as a technology? 10 being I understand all of it. I'm here because I love this project. 1 being I'm new to all of this. It's quite a steep learning curve and I'm here to learn. And any number in between would be helpful for me to know just who's on the call and who I'm speaking to. So I can see some 1s on here. I can see some 10s, some 7s, some 8s, some 3s, some 2s. Fantastic. We've got a big range of people on the call, and that really helps me to know how best to address this. So I think the best way to do this is probably to go into the cryptocurrency that everybody knows, use that as a benchmark, and then build from that. So just in the Q&A, let me know what is the one cryptocurrency that whether you understand the technology or not, you've probably heard of, whether it's come through in good news or bad news, whether bankers and politicians have been pro it or against it. Let me know in the Q&A which one you think we're about to go and have a look at. Yes, absolutely. Loads of people are typing Bitcoin, Bitcoin, Bitcoin. So we're going to flip across to a site that anybody can go and look at for themselves. That site is called coinmarketcap.com. And this site aggregates information. It just pulls information from all over the world, from central exchanges and decentral exchanges, and it monitors cryptocurrencies and tokens built on blockchain. And here at the top, we can see Bitcoin, the one that you all wrote in Q&A. We can see Bitcoin's trading price sitting at over 100,000. And we can even go and click on Bitcoin and give a breakdown of its price history and activity, etc. But the real question remains, what is the technology behind Bitcoin that has caused it to get to a value of over 100,000? And if we understand what that technology is, and we understand how that works, then we can start looking at other projects, other coins, other platforms, and start extrapolating where those might go in their growth, in their value proposition, in their near future. And so for me to best unpack this, I'm going to need you to get in a time machine and travel back 20, 25, 30 years, back to when the internet launched, what we call Web 1. Now, I'm not sure where you're all from. I got to scan through the chat. I can see we're all from different places. I can tell you that I grew up in a small African country called Swaziland. It's now called Eswatini. And I can remember the day that we first logged into the internet. The assignment we were given in class was find a pen pal somewhere in the world and write them an email. Who of you remember where you were when you first used the internet? And I can remember what that Web 1 version was. I had to go and literally, you could go onto this very basic internet platform. You could find someone, you could click on them and you could send them a message, a pen pal basically. Nowadays, if someone messages you and you don't know them, their email goes into junk folder or spam. And generally when some stranger is messaging you, it's either a person claiming that you've got millions of dollars owed to you, or it's potentially a 52-year-old man pretending to be a 16-year-old girl. You definitely don't enjoy getting messages from strangers. But that was what the internet was. As Web 1, we had access to connect with other people around the world. And then the internet changed and became Web 2. And Web 2 allowed us to have personalities or identity on the internet. So we saw Facebook launch, we saw Instagram launch, we saw people able to launch their businesses, websites onto the internet. So identity was possible on the internet. That's Web 2. And the problem with both Web 1 and Web 2 is that you're paying someone else to use their infrastructure. So when you post on Facebook, when you post on Instagram, your data is being monetized. It's being either sold or shared or distributed, or ads are being sent to you. That's where the income is generated from. That's how you pay to use Web 2. And it's the same with any Web 2 infrastructure. Right now, when we bank on the internet, that's a Web 2 infrastructure. We can send money to people. We've got our own profile. We can activate our savings accounts, but we're using someone else's platform. We've got identity, we've got profile, but we're being charged to use it. This is Web 2. What cryptocurrencies are and what blockchain are is they're Web 3. In other words, we're able to help build out the next infrastructure, the Web 3 infrastructure for the internet. And if we're able to build it out, we're able to share in the revenue generated from that infrastructure. So let's look at Bitcoin. Bitcoin, as its name suggests, is a coin that is derived from creating bits of information. I want you to hold on to the analogy of if you're building out an infrastructure, if you're building out a city, if you're laying the foundations for something, one of the most important things you need to put down is a road, the ability to move value from one place to another. And the way that blockchain does this is it builds out the road block by block. And so as the road is being built out, those who are helping to build the road, helping to put in the infrastructure, helping to build Web3, get a share of the value from that road. So the way that Bitcoin gives value is it spits out a certain amount of Bitcoin coins to people called miners. And in the early days of Bitcoin, there were very few people helping to build the road. And so those very few people were getting a large amount of Bitcoin. But over time, as the road increased in length and as it increased in users, the amount of people building it increased too. And so we ended up with an interesting situation where supply and demand dynamics kicked in. And now we're sitting 16 years later. Bitcoin has a very big, long, and established road. It has many users using it. And the specific function that it now fulfills is the ability to move value to different users using Bitcoin. Bitcoin has now become what is the right word for this? Almost like a treasury, a reserve currency. If we look at its value, it's become gold 2.0. It's scarce in number. It's very, very secure. It has healthy supply demand dynamics. And so now we see places like JP Morgan, HSBC, MicroStrategy, BlackRock, all using Bitcoin as a reserve currency. And so if we were to look at the Bitcoin road, the highway, imagine it to be a single lane highway, very secure, and it's transporting gold 2.0. That's how we got to Bitcoin being at the value that it now sits at, because the technology has positioned it with a very secure, very established road to transport value. And anybody who helped build this road, so creating blocks, anyone who helps maintain this road, they get a share of Bitcoin. Web3 means if you help create something, you get a share of that creation. Let me know in the chat function if you understand the difference between Web 2 and Web 3. Just a simple yes or no. Web 2, you're paying to access someone else's platform. Web 3, you're being paid to help build out the platform. That's the major difference. And so what we saw is other blockchains starting to emerge. Other blockchains that said, help us build out this new Web 3 infrastructure. And so we saw something launched called Ethereum. Now, let's have a look at Ethereum very briefly. Let me share my screen with you. We're going straight back to CoinMarketCap. So we're looking at Ethereum over here. Ethereum's value. Ethereum is a very interesting blockchain. Ethereum said, well, let's take this idea of building out infrastructure a bit further. And so Ethereum started building its road, its blockchain, block by block. And the people who helped build out this blockchain started receiving their share of the Ethereum coin. In other words, as you're building out the block, as you're adding to the infrastructure, you're getting a share of what is generated from the movement, from the use of that infrastructure. The big difference with Ethereum is that it didn't double down like Bitcoin did. It didn't say, let's just be a currency, a exchange mechanism of value, reserve currency. It didn't go that route. It went a step further and said, well, let's rather create a highway that can interact with the city, the suburbs, the sectors that run alongside the highway. And so we saw Ethereum end up with companies using the blockchain to build games. We saw companies using the blockchain to build marketplaces for art and creative images. We call that NFT marketplaces. We saw Ethereum be used to build out exchange or decentralized finance opportunities. This idea of its own little financial market, like a little Wall Street or a little stocks equivalent marketplace. And so what Ethereum did is it went, let's take this idea of building out a road block by block, but also building the suburbs that run parallel to that road, the use cases, the city that uses that infrastructure. And so as this was being built out and as the user base was building it out, they were getting shares of Ethereum. Remember, Web3 says if you help build it, you receive a share of the revenue from product services going through it. The only problem is that Ethereum was one of the first blockchains to do this. And like anything that goes first, it has the steepest learning curve. And so we saw over time that the road that was being built could not sustain the suburbs, the cities, the infrastructure being built around it. And so now the cost to keep building the city is increasing. And the number of users using this blockchain, using this highway, the number of people using this infrastructure is causing congestion. In other words, speed is slowing down. Let's have a look at another blockchain. I'm going to share my screen with you. There are certain blockchains since Ethereum that have become quite niche in their application. One of those blockchains is something called Solana. And so I want to touch on Solana briefly. Solana looked at the problems that Ethereum had and went, let's build something completely different. Let's build a highway, a block by block road, but let's make it quite specific to certain activities and certain sectors. And so this looked at the trading activity, the activity of moving in and out of projects very quickly, of launching projects very quickly, of trading the stock or share equivalent of those projects, what we call tokens, very quickly. You've got to imagine that Solana is the road that has attracted all the Wall Street boys. They're rolling in here on this road. It needs to be smooth and flat because all their cars are Lamborghinis and Ferraris and Porsches, so they can't have speed bumps. They can't have bad parking. It needs to be very slick, very smooth, and very fast because the activity that it's involved in is trading. The trading of these projects, these tokens, like penny stock shares, it's quick, it's intense. And so their road is built for speed. But like anything that's built for speed, it's going to have what we call downtime. Think about an F1 race course. When you've got all the fast boys on the race course, if one of them spins out, you bring the safety car on, the safety car slows everything down, they remove the debris off the track, and then the race can continue. And so while Solana has been built for speed, every now and again, just because of the amount of trade that takes place, the amount of transactions, they will almost spin out. They will have downtime where suddenly it'll go offline for 3, 4, 5 hours and then come back online again. The blockchain will suddenly choke up. And so you've got gold, this old 16-year-old blockchain, very established, transporting gold 2.0. That's where it's niched down. Then you've got Ethereum that's trying to build out the city around it, but unfortunately, it didn't build its road wide enough, or the infrastructure isn't quite good enough, so costs are rising and it's getting congested. Then you've got this other one that is niched down into trading activities specifically, super, super fast, but every now and again it spins out and has downtime. And then you've got the blockchain that DAO1 is built on. What if there was a way to take the best of what we see and put it into one place? Like any road, there are road rules. The road rules in Sweden are maybe different to the road rules in Australia. The road rules in the UK are maybe different to the road rules in South Africa. And even within those countries, the rules change slightly. Blockchains also have rules. We call these rules tokenomics. That word just comes from token and economics. But the easiest way to understand it is they have rules. Bitcoin's rules are very simple. They've got a limited supply, a capped supply of 21 million Bitcoin ever. So that's called a capped supply. It's finite. 21 million. They also have something called a halving mechanism, meaning that for every block that is produced, a certain amount of coins are issued in the first 4-year period. So let's pretend there's 21 million. That means in the first 4-year period, every one of the blocks that were formed added up to half of that total amount. 11.5 million were released total. Then in the next 4-year period, it halved down again from 11.5 million down to 5.25 million. And so the rules of this road were cap supply and a very specific release of Bitcoin that slowly decreases every 4 years. Those are the rules. Ethereum has some different rules. Ethereum also releases, its namesake coin, releases Ethereum every time blocks are produced. But one of the major rules is that the supply is infinitum. There is no cap to it. Meaning that even though you're building out the infrastructure, even though you're part of owning this infrastructure, the value of the token, you can never mathematically equate where it might go to. Is it an inflationary or a deflationary protocol that drives its value? That's one of the rules that exist. The other rules that exist is that it allows third parties to build on it. We love this third party rule, this development rule, this idea you can build a city. Solana, one of the best rules on here is just speed. Now, the issue is that it is a narrow speedway. And so you need to solve that particular rule by trying to widen it or increase its ability for more transactions. So we looked at these different rules and said, let's take the best of these rules and apply it into Apertum. So let's go have a look at Apertum. And I'm going to take us into a document that we put together a while ago. And this document, you can ask for whoever's invited you onto the school, say, please send me that document that says why DAO1 and Apertum is a total no-brainer. What DAO1 and specifically Apertum did is it went, let's have a capped supply and a halving mechanism. Let's make sure that whoever builds on this infrastructure, whoever builds this Web3, whoever becomes part of this project, has rules that are deflationary in nature. So there is a capped supply of Apertum, 2.1 billion. There is a halving mechanism that takes place every 125 million blocks. So we like these rules and we've applied these rules. The second thing that's happened is that Apertum is designed as a superhighway to allow other projects to build on. Multiple projects building along the Apertum highway. And so if you go into the Apertum Explorer, which is just a transparent way of seeing what's going on in that city, on that blockchain, you can see there's over 300, if you scroll down, there's over 300 independent little suburbs, little activities, little products and services popping up alongside the highway. And so anybody who is receiving Apertum, let me just go here. Anyone who is helping build these blocks out and they are receiving Apertum, they are benefiting from all these other suburbs, all these other activities that we see building out over here. So we kept in that Ethereum rule of building a city. And then we did something else. Let me go back one step here. So we come back to Apertum built a blockchain that has no speed issues like Solana. In fact, Apertum at the moment has done over 1.3 million blocks. So imagine a road being built out. 1.3 million blocks have already been built. It's generated over 1.4 million transactions. That means transactions value moving in and out of these different suburbs, activities, features, products, in and out. It's already done that. And yet its network utilization, the congestion level that it experiences on the road, on the highway, sits at less than 2%. It's got a lot of scope, a lot of speed, a lot of space for expansion. This is the blockchain that DAO1 is built on. So what is DAO1? Let's go have a look at it together. And I want to stick with this road analogy. If this is Apertum that is being built out, and this superhighway that is being built out already has 300 suburbs, Okay, 300 projects, 300 other companies and platforms, all building alongside of it. Then the best way to understand DAO1 is DAO1 is a massive suburb that has built itself to interact with the Apertum blockchain. But this massive suburb called DAO1, this mini city called DAO1, has different sectors and activity taking place inside of it. It has a blue-collar sector, what we call mining. This is your blue-collar sector of the city. Anyone who owns a mining bot, their mining bot goes and helps put in the highway, block by block. Every day, the mining bots, they head off to work and the blocks get built. And because the blue sector is doing the work, they're getting a share of the Apertum. In fact, every single block is giving away 8 Apertum, and that 8 Apertum is divided by all the different mining bots. That's the blue collar sector of DAO1. There's also a market analysis bot, and like its name suggests, if it's a market analysis bot, this is a little bit like your investment sector. Imagine all the big sort of investment houses all sitting together, and you've got advisors who are trying to find the best next company, the best next stock, the best next share, the best next product to move into. Well, this is what the market analysis bot does. It monitors all the markets in cryptocurrency. What do we mean by all the markets? Well, if we come back to coin market cap and you were to scroll down, you're going to end up going through thousands upon thousands. This is page 97. We're down to 9,800 and something projects over here. We keep going on. I think it monitors up to 9,000. There are closer to 72,000 projects taking place at any given stage on blockchain at the moment. And so there's this little sector in DAO1, this little bot that monitors and filters all these different projects and then notifies the DAO1 community to say, here's a potential project sitting over there that has real potential. It's got X amount of users using it. There's X amount of use case already. It's done X amount of transactions. You should add some of that cryptocurrency into your portfolio. And so the market bot, like its name suggests, monitors the market sectors. Then there's also a sniper copy bot, and this bot is specific to trading activity. This is a little bit like what we saw in Solana. You know, this bot's job, this is your white collar heading off to work, and this bot is looking at top traders. Who's moving from this floor to that floor? What value do we see from that project to that project? But it's quick, it's fast, and it's going to execute trades based on whoever it's copying, following. So you got your blue collar, you got white collar, you got white collar. You've also got linked into DAO1 through a link, a DEX. A DEX is a little bit like your banking sector in that you can exchange value in there. You can go and exchange currency. I want to exchange Apertum for USDT. I want to exchange this coin for that coin. That's what a DEX does. But a DEX also allows you to add liquidity. How does a bank make money? A bank says, give us your money. So you go put your money into a savings account. It takes your money, that liquidity, that capital, and then it puts it to work. Lends it out to a whole lot of people, charges them fees for that, 15, 16, 18, 22% as a loan, brings that back in, and then it says to you, hey, thank you for lending us your money. Here's 4% per annum. So a bank gathers liquidity, puts it to work, makes money from it, and then shares a small portion with you. DEXs behave the same. If you were to put cryptocurrency into here, if you were to add liquidity into there as a liquidity pair, it generates fees, 0.3% every time a transaction happens, and shares that back to you. If we go look at DEXs that are 7 years old on Ethereum, 20 to 30% per annum in fees coming back to the liquidity providers. If we go look on something called PancakeSwap, which is a Binance smart chain, generating 20 to 30%. Apertum is only 4 months old. It has been as high as 120%, as low as 5%. We know because of industry standard norms that that's going to even out at about 20 to 30%. Why? Because this is the banking sector for Apertum and the cities and suburbs being built around it, meaning that value moves in and out of here. And anyone who's adding liquidity earns fees for that value moving out. DAO1 is a major suburb. It has products or features inside of it that are engaged in different activity. And so if you're looking at this, if you've been invited to DAO1, you've been invited to this part the small part of the bigger story that's being told, but it's probably one of the most critical parts just because of this particular product inside of DAO1. Because if you own a mining bot, you are helping build out the infrastructure that's only 4 months old. It's done over 1 million of these blocks already. You're getting a share of the very currency that fuels the whole system. A pertum is the base fuel for all this activity, for value to move in and out of this suburb, or product, or feature, or project, for value to move there, for value to move here, for value to move here, for value to move anywhere on this infrastructure, a pertum is needed. And the miners receive that pertum, and they can choose when to sell it. Let me ask you a question. Use the Q&A for this. If you received Bitcoin at $1, if you mined Bitcoin at $1, and someone had explained the concept of Bitcoin to you and said it's this gold 2.0 blockchain that we're building out, in the future it's going to become a reserve currency, we think it might go to $100. When would you sell your Bitcoin? When it's at $1 or when it's at $100? Just in the Q&A, just type in $1 or $100. When would you sell it? If someone had taken the time to go, this is the technology, this is what it's built to achieve, you can go in and look on an Explorer, like we did just now with the pertum, and you can see every activity that takes place inside of that infrastructure. When would you sell that coin? At $1 or at $100? Everyone's saying $100 or higher than $1. Some people are just saying higher than $1 because that's growth, right? And knowing what we know now, the growth that we see on all these cryptocurrencies, because people just think Bitcoin value, that value is there because the user base using the highway increased. The utility increased. The number of people accessing it increased. Now, a pertum is not Bitcoin, even though it's got the same value rule, tokenomic, same value tokenomic at play. It's more than Bitcoin because it's got this capability, the Ethereum capability at play. Today, the coin is at $1, $1.04 maybe. It started at 2.5 cents. It's tradable across multiple exchanges. The highway is over 1 million blocks old already. 2.5 cents to $1. Where could it go? If our user base went from 50,000 users to 100,000 users, what would that do on the supply and demand of a pertum? If the project base, the suburbs, went from 300 suburbs to 600 suburbs, what would that do for a pertum? If the number of people who've activated their trading bots increases from 5,000 people to 10,000 people, how many more transactions are taking place? See, it's just mathematical rules. This is what rules of the road or tokenomics means. Rules that have been hard-coded that no one can come and change. Web3, like DAO1, is built on contracts, rules that the blockchain protects, so that a CEO who has a bad day can't come and change those rules. So that if a politician somewhere in the world denounces Bitcoin for 12 years, saying it's illegal, they can't change the Bitcoin rules. The code continues, Web3 continues. It doesn't care about our fears. It doesn't care about our fiction. It doesn't care about our emotions. It doesn't care about the societal climate. It doesn't care about the political climate. Web3 is building out, just like how Web2 built out. And a pertum has positioned itself as a general purpose chain with some very general purpose rules that it's taken from proven projects and so let's take the best of that and apply it here. Building it so that it can scale, so it doesn't reduce its speed. So its use is not just one use like Bitcoin or one use like Solana, but many uses. This is called a blue ocean strategy because it allows more and more development to take place on the blockchain. So let's go back to a little bit of screen sharing here. Where's that document I wanted to share with all of you? Oh, that's something else. I may have closed it. So we just go find it again. Resources. Everyone has access to these documents. You just go into your resources section. Fact sheet, 3 months. So let's go have a look at this together. There you go, it should open up. Right, so DAO1. So if DAO1 is the city and a pertum is the superhighway, there's got to be ways for you to go and check for yourself that technically it's sound, so it's being built correctly, that anyone can see how it's being built. And I would encourage you, if you are technically minded and you want to look at the infrastructure, you want to look at the coding, you want to look at whether or not this is doing what we say it's doing, then you can go into places like the Explorer, which is like an open source accounting book. You can even go into something called subnet portals and chain registries. So this is third parties who have access to all the same technology and they can see it. You can go and have a look at that for yourself, and understanding that it's got the best rules of Bitcoin, Ethereum, Solana put into one place. You can also then understanding how the products work. We've got our blue collar labor over here, putting in the blocks every day, receiving their portion of a Pertum. You've got this market analysis bot monitoring other projects, allowing people to diversify their cryptocurrency portfolios. You've got this white collar bot that's going and copying other top traders out there. You've got the ability to build your own suburbs with something called the Pertum Wizard, meaning you can go and build your own project, your own cryptocurrency, your own coin. You've got the ability to add liquidity in and out of the DEX, earn fees from that. You've got the ability to plug into the affiliate program. Now, let me just stop here and talk on this for a moment. I want you to think of the affiliate program as two types of people in the DAO1 city. You've got residents and you've got citizens. Think of it like this. Residents are people who move to a city because they like it. They like the climate, they like the features, maybe they've got work there. And then you've got the citizens, born and bred. They're the ones arriving at the football games and the rugby games and the cricket games and the basketball games. They are cheering for their city and their country. They are wild. They promote and believe in where they live. DAO1 has the same. We've got members, we've got active members. Members are people who use the features, the functions. They use the resources. They are citizens of are residents of DAO1. And then we've got active members. These are the citizens. They are marketing, they're promoting, they're talking about it. They're shooting up fireworks. The ratio at the moment is about 11% active members to, 89% members. So we've got 11% citizens, passionate, promoting, and earning commissions for promoting products and services. And then we've got our residents who get to use the products and services and benefit from it. One of the major ones being our blue collar worker over here, our mining bot. And so if that's you, you've got options. You've got options to be a resident or a citizen, a member or an active member. The really exciting thing is that a Pertum is tradable on multiple exchanges. It's not just the DEX that I've spoken about. There's also external central exchanges that are trading a Pertum. We've got Mexi, number 7 in the world. We've got Bitmart, which is a top 30. We've got L-Bank, which is a top 20. It's number 17 in the world. We've got P2B. So it's not just that it's being traded inside of our own cities and suburbs. It's being traded externally. Other projects, other people, traders, crypto enthusiasts are trading this token. And it's only 4 months old. If we go into CoinMarketCap and we look for a Pertum, here it is here. It's ranked 1,399. Not bad for a coin that's 4 months old. And anybody who loves trading, they're going to love this shape. I'm not saying you need to be a trader. I'm just saying if you are a trader, this is a lovely shape to see. 2.1 billion maximum supply, that's it. Circulating supply, only 3.8 million at the moment. We go down to those exchanges I showed you. Okay, confidence levels on those exchanges, exceptionally high. Volume trade in the last 24 hours, over 4 million on P2P. So people outside of the suburb, outside of the project, outside of the platform are paying attention already. It's only 4 months old. I've lost my little sheet I was working us through. Here it is here. How is the long-term value of a Pertum protected? Now, this is a very unique rule, tokenomic function that we've put in place. And I want to talk about this one over here. There's something in place that's called a buy and burn protocol. This is just a code that exists, a smart contract that the blockchain protects. No one can go in and change it. And what that contract does is it takes 5% of any purchases that are made specifically with DAO1 products. So again, if we look over here at our little example of our DAO1 city and the different products or features or services that take place, there's currently one product that gives you access to all 3 of these. It's called a membership tier. So you pay one product, it gives you all 3 of these features. When that product is purchased, 5% of that product value heads off to the DEX, buys a Pertim from the DEX, from the marketplace, and then burns it, destroys it, takes it out of market supply. Now, where did we learn this activity from? Type cash in the Q&A if you remember walking to the shops with cash in hand. I remember we would use cash out in Swaziland. We grew up on a farm, and then we'd travel into our nearest town. It was about 14 kilometers away. And Friday and Saturday was always club nights. It was when all the farmers got together at the local big farming club. And everyone played squash and tennis and cricket and rugby and all the rest of it. But there was restaurant and tuck shop and all these different things. And so as a kid growing up, you'd go to the tuck shop with your pocket money, your cash. And the thing is that cash would get very grubby because it would be traded in and out of that kiosk as a purchase and change about 1,000 times a night based on how many farm children are running around. And so what banks used to do is they would collect all the dirty cash, the grimy, old, torn, someone's written their phone number and given it to a girl sort of cash. They would collect that, send it off to be burnt, and then they would print fresh notes. Who remembers being so excited if you got one of the fresh notes? Like, oh, that stayed in your wallet for as long as possible. You tried your best not to spend it. This behavior of burning and printing is how you create a steady balance of cash in a system. There are periods in history where cash was burnt but not printed, and that created deflationary periods. And then there are periods in history where cash was printed in larger amounts than what was being burnt, and that creates an inflationary environment. In fact, specifically in our current financial systems, we're sitting in a high inflationary period of history. The last 30, 40 years have been high inflation because more money gets printed than burnt. And we wanted to flip that model. We want to go back to a healthy model. So we smart coded, hard coded the buy and burn protocol. So imagine a product being bought for $1,000, 5% of that, $50, heads off to the market, buys a Pertim, and then burns it, removes it permanently from the market. This is how you protect value over time. And anyone can go and track exactly how much has been burnt since the Pertim went live. You can come into what's called a Burn Explorer. This is an open resource. You can go track it on the blockchain. We can look at last month even, and we can see that currently of the 2.5 million Pertim that were mined by the blue collar miners, so the people who own mining bots are receiving a Pertim because remember they're helping build the infrastructure, they put the blocks in. 279,000 Pertim just through that 5% buy and burn protocol were burnt from the open market, were bought from the open market and destroyed. We've hard coded this in place because that's how you protect long-term value. Regulation. DAO1, as its name suggests, is built on Web3. It's decentralized. It doesn't sell any form of security. The only things it sells are the membership tiers that have a mining bot inside of it, an analysis bot, and a trading bot that can only copy other traders. And yet DAO1 had a regulation announcement pushed out by the TSSB, the Texas regulator. And so the foundation obviously responded to make sure that people understood what DAO1 is and what it isn't, and why it doesn't have a securities license and why it doesn't fall under a security regulation. It's all publishable, transparent. The great news is people are writing about DAO1. The public is aware of it. Multiple publications have been made specifically on DAO1 and Pertim by big publishers like CoinMarketCap, like CoinCentral. And again, you can access this information for yourself. Ask the person who's invited you to learn about this to just send you this document, because there's lots of little clever hyperlinks that take you. Everything that I'm saying here, you can check for yourself. This is not a believe me. This is go and look at that publishment. Go and look at those transactions. Go and look at that code. Go look at that exchange. Everything I'm sharing here is live, working, and accessible. But here's the bit that's exciting. We're only 4 months old. We're 4 months old, and we've been able to check every box that allows the DAO1 system to be a healthy, functioning suburb of the Pertim blockchain. So healthy, in fact, that we're over 1 million blocks in, over 1 million transactions, and over 300 new suburbs that have launched. And our user base is only 50,000. No hype, no big influencers running around. Shilling is when someone just promotes something because they got paid to and then they move on to something else. This has all been slowly and organically building because we've got citizens and residents. We've got 11% of our population is actively marketing and explaining and educating on these different features inside of this ecosystem. And because of that, we're getting a steady growth of users. We're getting steady recognition out in the marketplace. We're getting steady growth on the value of a person because the features work, the usability is there, the blocks are being laid, the suburbs are building out. Imagine when we get to 100,000 users. Imagine when we get to 600 suburbs. Imagine when DAO1 introduces more features, more bots and laborers and functions. All of this keeps adding value. And you're here 4 months in. If you go back and you look at Bitcoin when it was 4 months old, if you look at Ethereum when it was 4 months old, if you look at Solana when it was 4 months old, if you look at the parents of a person, so the DNA, the best of, it starts painting a really exciting picture. And so my role on the team is to keep making sure that we are technically building out features that can interact with the rules, the tokenomics established by the blockchain. That's my role. And what I'm trusting is, as we educate people and as we invite them into checking, double checking that those rules are good and those features are good and it all works, our community will keep growing, keep benefiting, and all those involved as a Web3 user benefits from that infrastructure. Not Web2, not paying someone else to use their services, you're Web3. Any products, any features, any services that you have paid for, you now own and therefore become a builder of, an owner of, a custodian of this infrastructure that's being built out. Now, the next time you sit with someone from the DAO1 community, when you're sitting with one of our citizens, passionate, explosive, fireworks, explaining this to you, point out to them which of those products excite you and then ask questions about it. I'm going to say this is a core product that people should understand because then you become someone who's laying the blocks, just like Bitcoin, just like Ethereum. This is a core function that you want to be part of, and then start asking about the other bits and pieces. Then start expanding. What else is in the city? What else is in the suburb? What are the services, features can I start using within this ecosystem? I hope this has been a helpful call. I want to encourage all of you to get back with the person who's invited you on here, get your questions answered, come and join us. We want to go from 50 to 100, 100 to 200, 200 to 500, 500 to 1 million. We want to increase the size of the city, the size of the citizens, the residents, the suburbs, and you're invited into that journey. As a Web3 owner, you benefit from that growth. So thank you so much for your time. We will share this recording and have a fantastic end to your week on this Friday. Take care, everyone.